All right. Welcome back to QAV TK episode 804. Hello, Tony. Welcome back. Welcome back to the QAV, Tony. How's it going down there in sunny Victoria, Tony?
Sunny. So did anything happen while I was away, Cam? I sort of haven't noticed.
Nothing. Nothing's
Nothing.
happening.
Nothing
Nothing
in
in
the
the
world.
world. No
Right.
news. I don't know. Every day I open the New York Times, it's just nothing, just empty pages. Stories about kittens and bunnies
Mm.
and just
Yeah.
rainbows, all that kind of stuff.
Unicorns. Great.
How about Tasmania, Tony? How was Tasmania?
Tasmania is fantastic. I love Tasmania.
Uh,
Had a week down there. Got back Wednesday night. So I've been actually almost back a week now. Yeah, played golf at Barnbougle, which is fantastic. Which is in the northeast part of the state. Lovely, lovely golf courses, lovely facilities, great golf, great food. We stay in some 4-bedroom villas, which are lovely. They're on the course. They're just like a 4-bedroom house, basically, with your own ensuite and then a big communal area. And one of the days, I mean, the food's fantastic in Tasmania, but one of the days, one of the guys had hired the chef from Piper's Brook, which is down the road, to come in, and she was meant to bring us a grazing plate for the afternoon, a grazing dinner. And she came in at 3:30 and we were still eating at like 12:30, and just like scallops, oysters, lobsters, duck, lamb shoulders, cheese plates. It was just a
oh my
feast.
God.
Absolutely gorgeous.
Wow.
Yeah.
Anyway, investing, Tony. As you told me off air, I know you divested your entire portfolio to buy TrumpCoin while you were away last week. Very good move, I think. Hopefully,
How
it'll
does
come
that
back.
how does that I'm sure there's laws in Australia against it, but surely there's laws in the States about, if you're a president, you're supposed to put things in a blind trust or something like that. So, because that's just basically funneling money to the Trumps, isn't it?
Yeah, yeah.
Buying something
But
worthless, which they're selling, is just giving them money.
yeah, apparently no laws. As I understand it in the
Ah,
US for that
right.
sort of thing.
Uh-huh.
It's like a tradition that you don't that you divest.
Right.
But Trump's
Ah,
like, yeah, you know what? I don't think I made enough money out of this the last time around. So the Trump coin and the Melania coin,
good investments.
literally like
Yes or no? Go.
2 days before his inauguration or something, or three
Yeah.
days before his inauguration, he just and the fun thing about it is it's only his fans that are buying these things. So
Mm.
he's just raping and pillaging his
Hmm.
own support base
Hmm.
to add some more billions to his name so he can try and compete with Elon.
Yeah. I was
He's
going to
got
ask that. How's it going compared to Dogecoin? And how does Elon feel about it?
uh, oh dear, chaos, absolute chaos. And we're going to talk about this later on, but it sort of leads into it. So obviously, the big launch of the new version, the R1 version of DeepSeek, Chinese AI company, caused a massive sell-off of
Mm.
some, but not all of the Mag 7 stocks last night. Apple did okay, and I think Microsoft did okay, but Nvidia shared $600 billion US in market cap, the biggest one-day loss in US history. Stock price plummeted 17%. Its worst day since the beginning of COVID. Um,
How many
uh,
billion was that, Cam? That'd be a lot, wouldn't it? 17% of
uh,
Nvidia.
well, 600 billion. That's what I said. Shared
Ooh. Oh, the sorry.
600 billion, yeah, US, trillion
Right.
dollars Australian, give or
Yeah, right.
take. Um, Now, you probably haven't used DeepSeek. Do you know much about DeepSeek?
Only what I've heard in the last couple of days. I haven't used it, and all I've heard is that it's about as good as ChatGPT for a fraction of the price.
Yeah, well, there's a lot that well, we don't know, but it's the funny thing is it's a side project for a quant company in China called High Value Trading Company or something like that.
Happy fun, high value trading company.
Yeah.
Red
It's been
Dragon.
around, and earlier versions have been around for the last year or so, and I've kind of paid a little bit of attention, and I used an earlier version of it. But they got a lot of smart boffins there that run their quant analysis stuff, and they were building their own AI, I guess, to help them do that, and using open source stuff that was available. And they were like, well, why not? Let's just make it public. And they've trained it on Chat GPT. So there's
Uh,
somebody, I saw somebody said on Twitter, so OpenAI stole all of the content on the internet to build ChatGPT, and now these guys have just stolen it out of GPT and given it back to the world for free. No, like I think there's a British fairy tale about somebody who did that. Basically, they're the Robin Hood of the AI world. They
yeah.
just stole it and gave it
Well,
back.
the CCP of the AI world.
Yeah. Well, I mean, they're a private company over there as much as, they operate in China. But yeah, and so the story supposedly is they built it on inferior chipsets to the latest and greatest Nvidia chipsets. This is like older generations that they could get their hands on. Now, people in the West, Elon doesn't believe that. Dario Modi from Anthropic doesn't believe that. He believes they're using smuggled H100s, but they say they trained it for $5 million, $5.6 million US versus like the 100 million that OpenAI spent training O1. This isn't just equivalent, like DeepSeek's not just equivalent to GPT-4, it's equivalent to GPT-O1, their advanced reasoning model, which is still very limited access. You have to have a plus subscriber account, and even then you only get a certain amount of queries every day on it. Theirs is free and is basically equivalent deep, and it's fascinating when you run it, as I have been doing a lot in the last couple of days. It's free. It's equivalent
Right.
of the best, pretty much the best model that
Yeah.
OpenAI has made available. And their API, you pay for the API, but it's 1/60th the cost, or yeah, maybe 1/30th the cost. Yeah, of OpenAI's API. So it's like they're making it cheap, and that's what has blown up. The idea that China can do just as good, but with far less money for a whole bunch of reasons, cheaper labor, et cetera, et cetera, et
Oh,
cetera.
and AI is just like any other industry. This is what's been happening in China for the last 30 years, right?
Yeah.
Handbags, wine,
Uh-huh.
cars, air
Uh-huh.
conditioners, fridges, whatever. They'll just reverse engineer what's out there and make it cheaper.
Sam Altman came out and said it's one thing to do all the original research, it's another thing just to copy somebody else's work. But yeah, I mean,
Yeah,
that's
they are two different things, but they're both valid.
yeah, right.
You
And
you both
so,
pass. You both pass the exam, whether you studied or whether you copied.
and this is what I've been saying for the last couple of years on Futuristic about AI, when people say, oh, it's going to all end up in the hands of billionaires. I keep saying, well, no, it won't, because this stuff, once it's out there, it's out there. And anyone will be able to take the theory behind building these things and build them and put them out there. This is open source. DeepSeek is open source too. So anyone can download it, train it, however you want, train it to talk about Tiananmen Square if you want, if that's important to you, and run it. And they have a light model that runs on mobile phones, et cetera, et cetera. So it's just the beginning of this, the massive proliferation of these things. And
Well, two thoughts. We're taking it back to investing. Two thoughts. Um, I have, crossed my mind that if AI gets loosed on the financial markets, it's going to potentially, well, it may spell the end of independent investing, because the, financial markets these days are set up for very fast trades, algorithmic trades. If you then power the algorithms times 100 or times 1,000 or times 1,000,000 in terms of their ability to discover value or discover asymmetric opportunities or arbitrages. It's going to be very hard for us to step in and say, we think this stock is cheap. It would have traded 1,000,000 times before we get to it. So that's going to be an interesting development, and I can't predict what will happen. But the other thing that I wanted to mention that struck me from reading about this downturn in Nvidia last night is I've seen this movie before. It could well be the beginning of the end of the overpriced US market. Now, I know you said the other Mag 7 stocks haven't come off, but Nvidia has. But oftentimes that's how it happens. It's the weakest link that breaks first, and it drops 20%. And that's what doesn't surprise me about the situation we're in, is that stocks, you can wake up one morning and everything's down 20%. And if you couple that with the fact that indexing is at its all-time high as well in terms of how much of the market is passively invested, and then because of the prevalence of the Mag 7 and the US market in world indexes, it starts to drag down the whole market. Now, it hasn't done that this time around, but I mean, it's only a matter of time that it will. It's dragged it up, so it'll drag it down as well. And it only takes a couple of speed bumps for the market to lose nerve on these stocks and they crash.
Mm-hmm. Yeah, and then you get, some big influential fund or investor who says something pessimistic about the future of these things, and people start bailing, and, it sets in doom and gloom, and everything, retreats.
Yeah, absolutely. It could be anything, though. It could be that there's an economic downturn and people just don't have the disposable cash to throw at them anymore, too, for example. But yeah, it's I don't like, one of the reasons why I don't like overpaying for things is because this is what happens. And some people say that they're an investor in quality at any value, but I think that's us about, sure, buy quality, but buy it when the price is right.
Yeah. Well, we'll see what happens. A lot of people I'm seeing online are saying buy the dip of Nvidia, and
yeah, it could be.
Maybe.
Yeah, absolutely. Buy the dip of TrumpCoin while you're at it too.
Yeah.
If that's your methodology. Yeah. Yeah, well, I've just got a pulled pork to do now.
Who are you doing today, Tony?
I've got ACL, Australian Clinical Labs.
Whoa.
So they're at the very bottom of our buy list, so I'll highlight that at the start. But they have been on the buy list on and off since COVID. They shot to fame during COVID, even though the company goes back a long way. It was listed in 2021 by a private equity firm called Crescent Capital. They kept the shareholding in it until about last year. It listed at $4, and I think Crescent Capital sold out at about $3.20. And the share price today is still below its listing. The share price I used for analysis was $3.55. So it was basically floated on the back of the fact that it was doing heaps of COVID tests because it's a pathology company.
Right.
The revenue was up even though it wasn't making money because doctors' surgeries were closed during COVID, and so they weren't getting the normal business. And they highlight the fact that they're still not back to pre-COVID numbers in the pathology business outside of COVID, because there's still income being made by this company around COVID tests and things, which surprised me because it's now 2025. But anyway, what else can I say about it? ADT is $2 million, so it's good for portfolios of a decent size, say up to sort of $6 million or so. And that's one of the reasons why I'm picking it. I'm going to quickly read through what it does. This comes from Stock Doctor and their précis. ACL is a leading Australian pathology services provider formed through the consolidation of several entities, including Healthscope's Australian pathology business in 2015 and St John of God Healthcare's pathology division in 2016. The company offers a comprehensive range of diagnostic services such as chemical pathology, hematology, and molecular testing, serving both private and public hospitals nationwide. It's under the leadership of CEO Melinda McGrath since 2015. ACL has expanded its operations and technological capabilities. And then from their own website, they have 73 labs nationally and over 13,000 collection centres around Australia and nearly 5,000 employees. They're also a leading provider of skin cancer care via the Sun Doctors brand, and they operate 31 clinics down the East Coast testing for melanomas. So that's pretty much it in a nutshell. They've been in the news in the last 12 months or so. They attempted to merge with Helios. And I think Helios may have been on our buy list over the last few months as well.
Yeah.
And but the merger was blocked in late 2023, early 2024 by the ACCC because Helios was number 2 in the pathology market and ACL number 3. Since then, Helios has, I think, done poorly and ACL's been up and down. The 2023 FY results weren't that great. Revenue was flat, but management highlighted that they're getting back to where they were in the non-COVID area. So non-COVID revenue is increasing. When I say getting back to pre-COVID numbers in the pathology business, excluding COVID testing. MPAT was down 23 versus the year before, but the margins were rising in the second half. And they, when they held their AGM late last year, they said that they were off to a good start this year as well. They also highlighted a couple of other things in their presentations. One was that GP numbers, in terms of at least billable hours, is down, and they thought that was because of the border closures during COVID, and so there hasn't been as many migrating or immigrant doctors into Australia, and so GP servicing is a little bit lower than what it was pre-COVID. And the other thing is that and it's probably a risk for this company, is that it's government regulated to a large extent in terms of what it can charge. And so they're always tussling with the government to raise the price of pathology tests, and that sometimes works and sometimes it doesn't. So there's been a bit of pressure on keeping costs down because of the cost of living impacts. But yeah, I'm always quite careful investing in a business that relies on government regulation because you don't get to set your own pricing, at least for part of our business anyway. If I look at the numbers, I should also say one more thing before I look at the numbers. They're currently conducting a share buyback of up to 10% of stock, which was announced in the last results and will run for 12 months. QAV numbers, as I said before, the analysis share price is $3.55, which is way above IV1 of 81 cents and IV2 of $1.85, but 3% less than consensus target. The other valuation measures net equity per share is only 88 cents, and so book plus 30 is $1.15. And net tangible assets is much less due to lots of goodwill on the balance sheet through prior acquisitions. So we can't really call this a value stock, which is why it's at the bottom of our buy list. Dividend yield is 3.38%, so it's okay, but it doesn't score for us on that metric either. Stock Doctor Financial Health is strong and the trend is steady, so that's good. Stockopedia give it a quality ranking of 85, which isn't bad, and an F score of 7 out of 9, which is pretty good. The overall Stockopedia ranking is 90, so that's also in their top 10%. PE for this company is 22.4 times, which is the highest in the last 3 years. So we give it a -1 score for that. However, PropCap is 4.5 times. So that's why it gets onto our buy list. So it's one of those companies where it's rolling in cash, but it's not all getting to the bottom line because the price to equity is high, but the PropCap is low. Earnings per share growth is forecast at 21%, which is good. But with a high PE, it fails our test of growth over PE being greater than 1.5. Company doesn't have an owner-founder. I guess on the positive side, the CEO's been around for a long time, so there's a fair bit of experience from that point of view, but no owner-founder. Can't score it for that. It is a new 3-point trend line buy since the last result, so it gets a score for that. But it doesn't have consistently increasing equity, so we can't score it for that. So it's not great from our metric on quality. It's 44% or 7 out of 16. But the PropCAF is what drives its ranking, and the QAV score is 0.1, so it's at the very bottom of our buy list. On the risk side of things, as I said before, government controls the price on lots of the ACL's revenue. They are actually undertaking a campaign to have more of their charges automatically indexed each year in line with inflation. But so far, that's only applicable to about less than a third of their products. And a lot of the indexation has been offset by other cuts in government fee schedules. So they are effectively a government lobby business in some respects. There is also they're highlighting other cost pressures in their own business, so rather than the externalities. But they are experiencing labour shortages again as a hangover from COVID and the borders being shut, and with inflation, rising wages, and so both of those have had impacts on their business negatively. Opportunities, though. We are part of an aging population, and so there's a growth in demand for pathology services. So that's a tick for them. And they're in a very strong financial position, lots of cash, low debt. And so their history is looking out for acquisitions. And they got knocked back on Helios, but it won't stop them from trying to find other acquisitions as well. So the upshot, I think, for this company is that it's probably right to be on the bottom of the buy list. It seems to be a good company. It's number 3 in its market, maybe number 2 since the ACCC had a look at it with Helios in decline. It's very strong PropCAF, but it's in a semi-regulated industry, and that's got to dampen its ability to set prices. So have a look if you have a large portfolio. It's a large ADT stock. It might be something worth looking at. They are forecasting growth next year. So it's one of those instances where we are able to buy something growing at 20% for a decent price.
Yeah, these sort of getting back to AI, it's going to be interesting to me to see how businesses like this, medical diagnostic businesses, are impacted by AI over the next few years. And whether or not they start investing largely in AI systems to speed up their research or to add new layers to it.
Yeah, you got to think you got to think they will. It's a productivity opportunity for them, I would have thought. 5,000 employees, you'd have to think there's some labour saving that'll be done. And as you're well aware, AI has been useful in even producing better results, not just faster results for diagnostics in the medical area, testing for cancers, etc. So it's got to be an opportunity for them. Yeah.
Yeah. I mean, an AI system, if it's trained around this sort of stuff, can, in theory, just look at the fine detail of millions of markers and, very quickly return alarm bells if there's something that needs to be highlighted. Well, thank you, Tony. All right, TK,
Okay.
have a good week.
You too.